What is going on today, YouTube? I want to make this video out of a request from a viewer asking me what I look for when I'm going in for upcoming trades for the week. None of this information, this is just basically what I use to look for trades, look for what I'm going to enter in, and where I think a good stock or ETF is to enter. I'm going to go through my process of what I look for, why I do it, and a few steps. None of this stuff's guaranteed to bring you guys results, but the main thing is calculating how much risk and how much reward you have in an upcoming trade. Just to name off top 5 things I look for, and then I'm going to go through some examples of them. First of all, I always have a watch list. I always have a watch list of ETFs. I like trading these ETFs because they move a lot, and some of them have some pretty distinct patterns that you can look for. I also look for big drops, whether this just be off of unknown reasons or if this be from earnings that just came out. Company scandals. This is going to be something like Facebook, which I'll get into later, showing you what I mean. And the current stock trend. But to identify stock trends, you need to be watching them. You need to have these stocks on your watch list. You need to be identifying them. And when it all comes down to it, it all comes down to risk-reward. You got to calculate in every entry or exit. I don't care what anyone tells you. They do not know for sure if a stock is going to go up or if a stock is going to go down. It's unpredictable. You can't tell. And this is just all based off pattern. This isn't the fundamentals of the company or whatnot. And even if you're looking at a company's fundamentals, it's not guaranteed to go up just because you know it's a good company. If the market doesn't realize this company's good, it's going to be stuck where it is. This is all what the stock market values these companies. And I'm also going to bring you guys a scanner. This scanner I use, I actually found it, I hope I don't butcher his name too bad, from Ricky Gutierrez. You can go check out his channel. I'm going to put the link up top, and if I can figure it out, I'm going to put the link up top, and then I'm going to put the link down in the description also. Give you a link to his channel. He makes some great videos about swing trading, stock trading, everything. I've learned a lot from his channel, and I wanted to bring you some separate tips and tricks I use myself. So let's get started. Alright, so first, what I want to go over. I told you, I like trading these ETFs. So over on this side, I have a watch list of ETFs. You guys can, you can pause the video, and you can copy down all these ETFs. I also got these from Ricky. He laid them out in a couple of his videos and just showed you the different ETFs he trades. So if you want to pause the video, write them down, add them to your watch list, feel free to. Those are all of them. I just scrolled through them. You can pause the video, do whatever you need to. But anyways, the first thing I want to say. So you see, like, I have these lines. I have these trend lines. I have these in just because I've been watching this stock forever. One of the best things to do sometimes is to just erase all the lines you have and start from scratch again. Identify these new trends, these new patterns, where this stock is currently trending. I don't care where it was trending, back in December of last year. I care what's trending now, what it's doing now. So to show you an example, we'll go to DGAS. It's a natural gas ETF. This is an 180-day 4-hour chart. So over the span of 180 days, every candle 4 hours. And then I also have momentum down here and RSI indicator. There's other videos explaining to you guys what these are and how to use them. But, okay, so now we're just going to identify patterns. Like I said, this is a stock I've been watching. It's an ETF. I watch it all the time. Identify the new trends. Right now, the trend, it keeps on, over the long span, keeps on making lower lows. And you can also see by the momentum. This is the momentum on the big chart. It's going down. So it keeps on pushing down, keeps on making lower lows. So that is not something I'm looking to invest in. I like to look at stuff that is trending up. But you can identify the pattern. So look right now. Even the past, we'll just look at this. Right now. You can see it keeps on making a pretty consistent bottom. Down here around $22. Keeps on bouncing off, coming up. And even right here. Over these past few days, it's a rough line, but still, it's been making a top around $24. So if you're looking to buy this ETF and make a swing trade, to me, since it's in this pattern right now, why would I buy up here towards the top? It keeps on bouncing off this and coming back down. I'm going to wait until it comes back down to this $22 level, wait for it to confirm that it's going to go up again, and I might take a swing position in it. But just because it hits this bottom too does not mean it needs to automatically bounce. And this is where it all comes into risk-reward. If you're going to buy here around this $22 mark just because it's bounced there before, your risk Over the long term, technically your risk, it could break this bottom and keep on going down and down and down. But if it starts trending up, say it hits this bottom again, starts trending up, and it's around here. So you now know it's trending between $22 and $24, say. So you have an 8% reward, 8.46, and about a 2% risk. So that's, you have a 4 to 1, 8 to 2, 4 to 1 chances of you making money or losing money. That's all you need to calculate. It's risk reward. And that's the point of it. No one knows if the stock's going to keep on going down or keep on going up. And you know what? As soon as it breaks that pattern, say it keeps on falling lower after it makes a jump, and then falls back down past 22, it depends how risky you are, but it broke pattern, so you need to get out of that trade. Anytime a stock breaks pattern, does something different from what you think it's going to do, it's probably best to get out. I know it sucks losing money. I know but it's part of it. The better you can calculate your risk reward and the better you can go through that, the better off you're going to be. So now that we identified the new trend lines, right now I know it's still trending up, so unless it breaks this resistance line and starts forming a new pattern, and this old resistance becomes a new support, I'm not looking to invest. I'm not looking to trade it. I'm not looking to do anything. I'm going to wait patiently till it comes back down to this $22 mark, see if it continues trending up, and then I might take a swing position in it. And you don't just have to look at the 180-day 4-hour chart. I also like looking at 6-month day chart. Because if you're trading day by day, you can see how this stock fluctuates. If you're not at your computer, you can see day by day, okay. Like day by day, this stock's jumping 6%, stock's losing 4%. You can get an idea of what could happen the next day. Nothing's for sure set in stone that it's going to happen, but it gives you a good idea. And if you're doing this based off risk reward, that's the stuff you need to look at. So for instance, we'll go to another ETF. We'll go to DRIP. It's been falling for a long time now. And right now, this stock is making higher lows. So since it's making higher lows, it's starting an uptrend. Overall EMA line, this EMA line could act as a big resistance point. It could bounce off this and fall lower, bounce off, fall lower. What the point is here, you don't know. It's all about calculating risk reward. We'll go to DRN. DRN's another one. So now you can see it's in an uptrend. It was trading down here between these two lines for a while. And between here and in between here. So guess what? It came down to here, broke past the EMA line, and kept on going higher. Came back down. This acts as a new support line. It broke through it, but it still acts as a support. So did this EMA. Now it keeps on going higher. So you could say, right, from that little time period, it was trending between this and this. Broke through, goes higher. So you could wait till it drops back down to this 1950 mark. Might be a good entry. It's all about your risk reward. So identify your current stock trend and base your risk reward off of that. DRV. It's coming near its 180-day low. If it bounces here and continues up, I know the stock's still on a downtrend. It's on a consistent downtrend right now, making lower highs. But if you come down here and makes a jump and starts trending up again, calculate your reward, calculate your risk, and see if it's worth entering. Right now, do I think so? No, because it's still going down. It's still on a downtrend. So now, another thing I like to look for. We're going to use Facebook for this example. Facebook, not a long time ago, about, a month and a half, 2 months ago now, they were in that big scandal of they're selling your data, they're selling everything, they're selling all your information, and that's why the stock dropped. I mean, this stock dropped 20%. If you look at these fundamentals and you realize that this is not affecting the company. It all mattered what the public was going to do about it. If the public decided, hey, everyone's going to leave Facebook, and if everyone left Facebook, it would be unprofitable. But that wasn't the case. Facebook actually came out with earnings. I mean, that's another thing itself. I'm going to go through that with a different company. We go through earnings. They could be better or worse than expected. But still, after this big drop and it starts going on its uptrend again, I mean, you could have got in for a huge swing trade, and you're buying a good company. That's a 30% gain in 50 days. I know it's a long time, but that's a huge gain. And that's you catching the absolute bottom and absolute top. But that is just another thing to look for. Want to company has a big scandal, it doesn't affect the overall company's fundamentals, their value, their worth, their profits, and it's all based off public worry, yes, it's a risk, but you could produce a high reward. The bigger the risk, the bigger the reward. With that being said, you never know what's going to happen. I mean, you could try to find the bottom here, and it could keep on going down and down and down, and you could lose another 20%. You don't know. No one knows. So we're going to go to another company, U.S. Steel. You can see way back here, U.S. Steel, it had a big drop, and it was on an uptrend, still making higher lows. Earnings came out. Earnings did not reach expectations that this company had. So it dropped from here down about a 15-20% drop. That's a big drop for a company. And the earnings were still good. It's not like they reported negative earnings or something. But it was not what was expected by the market. So that's something else to look for. That's a big drop. If you can figure out and wait for it to start uptrending again, it could be make for a good trade. Wait till it starts uptrending. Say you got in here. Wait. I mean, that's 15% right there. So they had a big drop because they didn't reach the expectations of their earnings, but they still recovered, and look, it's back to where it was trending before. Another thing I want to show you guys, a site called FinViz. FinViz, you can use this. It's a very useful site. It shows you top gainers. A lot of these times, though, these are penny stocks, and they're very manipulated by news and so forth, and they're risky. I mean, these are the risky stocks. When you get down less than $10, they move very fast. They're very volatile. You can even see most volatile, unusual volume. But if you're looking for different tickers and to understand like support resistance lines, channel up, channel down, you can see all of these signals, these right here. They give you different tickers. You can hover over it, and you can see how that stock is trending right now. So I want to show you an example of even identifying these patterns. We're going to do this UBSI, United Bank Shares. Okay, so you can see it's very, very volatile. It seems like it moves very quick. But anyways, the channel they're talking about, and you can replicate what you saw on that site FinViz. Draw your lines in yourself on TD Ameritrade. Top of the channel's there, the bottom of the channel's here. We're going to say about. I didn't draw them perfect, but about. So now, this is a stock you could add to your watch list. You know it trends between this high point of $38.24 and this low point of around $34. Right now, it's up towards its high point. So just wait. Wait to see what happens. Or if it falls down to the EMA, bounces off the EMA, calculate your risk reward. But you could add this kind of stock to your watch list and just wait for it to come back down to this $34 mark. Comes back down, if it shows positive signs of going back up, get in it for a swing trade. And this market's all about patience, all about calculating your risk reward. No one knows what is going to happen. And it's risky because news could come out overnight and send the stock way down. Last thing I want to show you guys is a scanner. This scanner it's also from Ricky. He's the one that came up with it. I changed it a little bit to fit my needs. You can pause the video, set up a scanner yourself with stock, study. The only one it's coming up with right now is SGRY. So we're going to go back to the chart. Just real quick, RSI, it's over, supposedly, it's not a short tell sign, but a stock is overbought when it's above 70, and it's oversold when it's below 30. So right now, this stock is still on a downtrend. We'll zoom in a little bit. Perfect example right here. Look at the RSI indicator. They were saying this stock's oversold right here, but guess what? It kept on falling lower and keeps on falling lower. That's why I said you can't use any one of these indicators, and it won't ever tell you a sure sign of, okay, buy right now and you're going to make money. It's all risk reward. It's all calculating that. It's all what's comfortable to you. And just be patient. These plays come. You may not be able to get a trade every day. You may not be able to get a trade every week. Be patient. They will come. So to sum up the video, look for big drops. Look for support resistance levels. Use that site, FinViz. Pay attention to what's happening in the world, like business-wise, stuff like that right now. There's no one sure tell sign of what stock to buy, when to buy, and it's going to make you money. If it was that easy, everyone would do it. So if you like these kind of videos, guys, and it helped you, leave a like on the video, subscribe to my channel, leave a comment below if you have any other videos you would like me to make or any other questions. I can try to answer them. Also, told you before, Ricky has a great channel. I'm going to put this link in the description. I'll put it above if possible, and I will see you in my next video on Wednesday.